Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for Tuesday. Got to think of the date. It's Tuesday. It is the 8th of February, 2022, about 6:40 in the evening. All right. Markets are reacting very interesting right now. The bigger picture is we had that hellacious break in the markets, in stocks and so on, and the question was, where was the low? I think we saw it, past tense. Now the market's really rewarding those that bought that, and I don't think that was the original game plan people thought about. We'll talk about that in the financial update. Remember, on Thursday, I'm holding the live webinar to come in and get to it. If you didn't get my invites, I've sent them out twice already, so if you didn't get it, you're not getting it. Then what do? You take your cursor, you move it up here. Box will appear at any point during this. Fill it out. You've got everything you need. Write me the questions of the markets you want me to cover. And I do appreciate many of you gave me for my Spider ETF a lot of markets you want me to cover, and my reviews and so on. I'll also use those as charts when we do our review this coming Thursday. So got a lot there. Futures, they're like that. I think you realize it. That's my background. And now I've branched into the spiders. They're the same. The spider ETF to me is just like trading a futures contract. You don't get all the leverage. It's not as levered, which I think makes it more fun for me because you're not taking a beating when you're terribly wrong. Okay, so as we take a look at the chart and we go to gold, the one thing that should be evident to you is you're going sideways, and you've been doing this for a long time. The inflation theme was there. The market did great with it. It was running, and then the market got the rug pulled out from under it when Fed Chair Powell switched gears. You remember that. Started talking about interest rate hikes coming quick, the balance sheet runoff. That got the dollar going up dramatically, took the air out of the bubble in gold, and it fell back. Well, now the thinking has changed. The market is now saying, well, gee, if the U.S. is going to get 4 to 6 rate hikes, I'm just making the number up, but it seems to be in the theory, that's going to hurt the U.S. economy. They'll clamp down too much and hurt it. So the dollar goes down, and it's given air back to the gold market. I think that's the way you look at it. When I look at the swing line, we have an uptrend. Higher lows, higher highs. When we look at what's going on, this is the 100, the 200, the 18-day average. So when we fell down, I was looking for support as that was occurring, and I think you have to say that is what occurred. The 200 didn't offer much, but certainly the 100 was a zone the market tried to stop at with, as you know, I'll put it on here in a moment, the Bollinger Band. And now on the way back up, you fight at those numbers. What was theoretically support becomes theoretical resistance on the way up. Market just got on Monday right here. It got another gain, and right now it's pulling back a little bit tonight. Okay, but let's pretend that you're sitting next to me, and I'm going to say, what do you want to do? And you're going to say, well, I'm bullish gold. Okay, where would you put a stop? You always have to have an exit. Things change. You don't want to be wiped out. And this is the futures market. Leverage is your enemy. I know you're going to think it's your friend. Believe me, it's your enemy. I used to tell big accounts of mine, trade the market like 40, 50% leverage. When you put on a trade, don't use every dollar in your account. What people want to do is use every dollar in the account because they want to get rich on the futures. Well, if you hit it, you can. But most times you don't hit it. So you're always on the defensive, and then you get hurt, and the trades you like, well, you get gun shy. That's just reality of trading. Slow the game down. I like that better than options trading, too. Options, you have an enemy, time decay. It's a terrible enemy. Most options expire worthless. You know that. And to write options, the volatility in them, because they're thinner than the underlying stock and or the futures market, you can get your butt handed to you. You think I don't see that owning a brokerage firm? I have an edge over brokers you talk to. I own the firm. I've got to see this, and I've been at this for, been in the business 52 years. I've owned my own firms. I have this division that I run now. I love what I do, but I also understand risk, so be careful. So in looking at this, this is where I'm taking you to. If you put a stop under the most recent low, it's too big. It's a hard market to trade right here. If it just picks up and runs, well, 1850, 890, the Bollinger Band's the resistance. And here's that 100-day average with the Bollinger Band. You see how the market fell in and did just what I teach with that study. Momentum is up. Bias is up. Trend is up. I just don't like the risk, but I do like the trend of the market. The gold-silver ratio is correcting, which means silver is getting a bit stronger. You need less ounces of silver to get an ounce of gold. And you can see what silver has done. Over the past 2 days, this market has ended this decline that began all the way up here, same time as the gold break, off the Fed. And it broke everything down. Now silver said, well, maybe I shouldn't be left out of the party. So yesterday ends the party. This line to the downside is over. It never did embed. It just got oversold. Where's the resistance? We have two numbers. You have the 18 and the 100-day average, the red and the green. They're right here, and that's what the market's today fighting at and tonight. I mean, not hard to see it. I could teach this in a grammar school, and the kids would get it. In the copper, turn your attention to one big thing. The market is going sideways. Don't look for the big moves just yet. This is a hit-and-run market by the pros, and it's almost a contra-trend trading market, which makes it difficult. The rewards are coming from selling the rallies to buy the break over the 18-day average, or buying the feeble big breaks here under the 18-day average to get back up to it. That's not what you want to be doing. It'll come out of that pattern. But this pattern, the longer it keeps doing it, now the question is it a base or a top? I'm thinking it's a big base. Jeff Curry, who you know from Goldman Sachs, he's all over TV all the time, he's correct in this, that we are looking in these markets in backwardation. Everything's going where there's a shortage up front of everything. I was reading today that the LME stocks, that's the London Metal Exchange stocks, are again crashing down of physical copper. You get it to the point where the people that then need it, they go for it, they don't have it, and it starts another rally. You got to watch those things. Am I a fundamental trader? I am not. Do I read the fundamentals? I absolutely do. Why? I want to know what's moving the chart action. In the platinum market, you're setting back here to the 18-day average, so the trend is down. The bias has stayed up because you're over the 18-day average, and it's let the market correct an overbought condition at this point. So the market's trying to get its feet under it. It hasn't done it yet, but it's working that out. And here's something that you got to learn how to work with, okay? Remember, you get an embedded reading, you lose it. See how the red line's closed at under 79 for the first time? That sets up, typically, a test of the closest main moving average under the market, or the closest of a Bollinger Band, the closest of the two numbers. Bingo, right with what I wanted. So now what I see is a market that's got near-term support at the 18-day average, resistance at the 200. Like the platinum, it's now working off an overbought condition. Maybe not the best place to be right now, but at least I understand what's going on. And in the dollar, the high that we made off the first ideas of interest rates, the interest rates did the dollar in. Because we kept hearing, as we look at the CPI and other numbers, well, we're not going to get 1 or 2. We're going to get 3. No, that's not right. We're going to get 4. That isn't right either. We're going to get 6 right away. Every single meeting, there's going to be one. Well, you think that doesn't weigh on guys like me going, gee, if the Fed's going to give you every interest rate, I know they're going to tell me, oh, rates are relatively low, and you don't have to worry, it won't slow down the economy. Nonsense. The smart money's saying that became a crowded trade, and they don't have that right, and they drove the market back down. That is what went on, in my opinion. Now, remember, to view, come to the webinar. Got to go up here. If you didn't get the invite, sign up off the site. If you don't understand what happens right here when you lose an embedded reading. Take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.